Hi everyone, I'm Karun and welcome to Karun's Gyan. Today I'm going to talk about a new share that is Centrum Group. Though I won't be talking about Centrum Group all in all, I'll be talking about one of its subsidiaries that it has recently acquired, which is known as Unity Small Finance Bank. It is a joint venture by Centrum Group and Bharat Pe, and it's going to be India's first digital bank, and it is an extremely undervalued fintech company. It is valued considerably lesser than 197, which is Paytm. So let me just give you a quick background about this company. So Unity Small Finance Bank, as I said, is a joint venture of BharatPe and Centrum Group. It comes from PMC Bank. We all must have heard about PMC, Punjab Maharashtra Bank, which was sucked dry by its directors, and HDIL's Wadhwa Group. And now it's bankrupt. Depositors are holding their hand and are trying to get their hands on money. But now, since this bank has been acquired by Bharat Pe, which is Resilient Innovations and Centrum Group, there is some scope of recovery for all the depositors. But we will not be talking about the depositors. We'll be talking about the structure of this new bank and how one can invest in Centrum Group and have a good return on the capital. So Centrum Group owns 51% of this entity, while Bharat Pe owns 49% of the new bank. As we can see, this new PMC Bank is now Unity Small Finance Bank, and effectively a banking license has been given to Centrum Group, which is amazing feat considering that Centrum Group is an NBFC. As you can see in this picture, Unity Small Finance Bank has about 2,400 crores worth of assets, 2 lakh customer base, equity capital infusion of about 1,100 crores and 145 branches. You might wonder, why does a digital bank have 145 branches? I will get to the answer of this question in the later slides. All right. So why is BharatPe important to this venture? Well, BharatPe is the only entity that is holding this venture and is the only entity that has made me make this video for you, because it is because of the BharatPe's fintech touch and amazing business model. If I talk about BharatPe is a fintech company in the segments of unified payment interface, POS, point of sale, which is used for debit card and credit cards, and consumer credit. However, unlike its peers, the peers that I'm talking about are Paytm and Google Pay. This is not a consumer-centric fintech company. This is a merchant-centric fintech company, and it caters exclusively to merchants. It has extensive network, about 6 million merchants. These merchants are mainly Kirana stores, mom and pop stores that use the services of BharatPe. The annual transaction processed value, or TPV, is $7.5 billion. That is 50,000 crores. This is an amazing feat for a company that has just started its operations 3 years ago. It also offers a zero POS machine in an industry that charges a minimum fee of 1.5% per executed transactions. Uh, to be honest, 1.5% is like the bare minimum. I know cards like Amex that would charge 3, 4, 5% of fees for any executed transactions. That's why people who have been abroad might have noticed that Amex is not accepted in a lot of stores because of the notorious fees they charge to the merchants. The zero POS machines has tremendously helped Bharat Pay on board Kirana stores that operate on razor thin margins. If I talk about Kirana stores have low margins and often rely on loan sharks for capital, as banks would surely not lend them without collateral. Banks might lend other rich people without collateral, but surely not mom and pop stores. So the main challenge for these Kirana stores is to accept digital payments without losing on to margins. And since there are no fees associated with the digital transactions that are executed on BharatPay's UPI or POS uh, technology, BharatPay was able to grow its merchant base to 6 million, that is right now. Then it soon started to use the 6 million merchant base, to distribute short term loans. And it started partnering up with NBFCs, non banking financial companies. And basically, it would go to NBFC, say that, well, I have these many merchants, and these are the cash flows, these are the frequency of transactions, and you could easily lend out this much amount of money to the merchant users. Also, it started something known as P2P, which is peer-to-peer lending, where investment companies like Liquid Loans, Lend and Club would offer merchants returns as high as 12% in a market where you're getting 12% returns in a country where there is only 7% inflation. Trust me, this is a very, very good strategy, and this shows the prowess of Bharat Pe's technology, Bharat Pe's niche. All right, so we got to talk about the Bharat Pe's merchant credit portfolio, which is the significant component of its business. So Bharat Pe, being a technology company, it has developed an AI-based algorithm that uses merchant data. For example, the type of transactions, frequency of transactions, etc., etc. And this gives them a strong insight into what the business's cash flows are. Using this, they'll analyze the merchant's loan history and credit score in tandem to make a loan offer. This loan offer is made to the partner NBFCs that they had. However, things have changed right now. I would give you an update as well, but this was their business strategy earlier. The fintech's partner NBFC firm would then process the loan and would credit the same into the merchant's account. All since everything is digital, hassle free, for both the company and the shopkeeper. Most importantly, this is also collateral free for the shopkeeper. So the shopkeeper need not worry of going and filing papers, giving collateral. Everything is done in minutes, in days, in hours. So let me talk about the details about the loans that are given. Mostly these are unsecured loans. Unsecured loans are loans that do not have a collateral on it. Secured loans are loans that have a collateral on it. So these are unsecured loans that are in the range of 20,000 rupees 7 lakh, and the repayment is done within 12 months, and they come at an interest rate of about 2% per month. If I equate this to an annual interest rate, it's about 27% per annum. And that's why you see the difference between secured loans that have interest rates of 14 to 15% to unsecured loans that have interest rates of 27%. And this is just to offset the extra risk Bharat Pe and the NBFC companies are taking. So the deal between Bharat Pe and the NBFC company is that the Bharat Pe would take a good chunk or a small chunk of the earnings made by NBFCs. I don't have the data on that because BharatPe is not a public company and it need not disclose this data to the public. Merchants would then pay back the loan in the form of daily installments. And currently, BharatPe is processing loans worth 300 crores every month. And mind you, this is a company that started 3 years ago. Also, you might wonder that though they are using AI-based algorithms are not always successful. They might fail, especially when there is a lot of shock in the market, such as the shock that was created by the pandemic. However, surprisingly, unlike banks and other institutions that have lent out money, Bharat Pay had the repayment rate of 96% even during the worst of times. So it is something that one should think about. All right. So how is this achieved? Given the ubiquity of digital payments, Bharat Pay would generally deduct the installment value before bank settlements. For example, if the merchant owes a daily installment of 500 bucks to Bharat Pay and it has received cash in the form of UPI or POS to the amount of say 1,000 rupees. So Bharate would simply deduct the arrear payment of 500 rupees that is due in the form of daily installment and would settle the other 500 rupees as a bank settlement every day. So this helps Bharat Pay take off the cream from the top and giving the rest to the merchant. The cherry on top, Bharat Pay's niche merchant credit portfolio. Within this year, the payment side of things has grown 5 times, and the lending business, the main business where the money is, has grown 12 times. Bharat Pe is currently valued at about $900 million and has distributed loans worth 1,600 crores. It has rolled out product after product. The recent product that it has rolled out is D2R, which is distributors, retailers, and merchants. It offers collateral free loan of up to 50 lakh rupees for 7 to 30 days. Again, it is using AI based algorithms to find out better credit scores and to analyze the cash flows of these distributors, retailers, and merchants. However, we must note that the collateral fee loans are really, really high. They're about half a crore compared to the maximum of 12 lakhs that are given to the mom and pop stores. What one must also note is that BharatPe has a very good ability to not only bring out new products, but also to execute them really well. All right. Now that I've talked about BharatPe, I'd like to talk about the bigger promoter, which has 51% stake in this entity, that is Centrum Group. This is the entity and its list of subsidiaries in this table. As you can see, the entity, the parent company is Centrum Capital Limited. This is the share I would want you to buy if you want to invest in this company. As you can see, it has 18 subsidiaries. It has a trust and it has an associate company as well. Let me just quickly highlight the main company that you should buy, Centrum Capital Limited. The share is about 31, 32 rupees. And trust me, in the next 5 years, I expect the share to go to as much as 300 or maybe more. It'll leave Paytm far, far behind. If I talk about the subsidiaries, there are two main important subsidiaries that I've highlighted on this table that one must keep track of. It's Centrum Microcredit Limited and Centrum Financial Services Limited. These two subsidiaries have been spinned off and are now the step down subsidiary of Unity Small Finance Bank. So, whatever asset books, whatever clients, whatever portfolio is under these two subsidiaries, it is effectively the step down subsidiary of the new entity that is Unity Small Finance Bank. So, what does Centrum Group has to offer? I just talked about the technological prowess of Bharat Pe and how it is doing wonders. Why did Bharat Pe choose Centrum Group and not a bulge bracket bank like HDFC, Kotak Mahindra, ICICI, Axis, or maybe a small bank that is doing well in the technology field, such as IDFC First Bank? Why Centrum Group? And why this only NBFC? Well, this slide would answer all your questions. So, Centrum Group is actually a recognized player with only 23 years of experience, not that much and not that less, in the fields of financial services, microcredit, insurance, broking, and wealth management. But before I talk about this further, I want to go back and show you the subsidiaries again. We can see there are broking limited, retail services, international services, capital advisors, alternate investment advisors, insurance broker, again another capital advisors. So Centrum Group is offering a wide variety of financial services that one must keep note of because there is something related to this coming up in the later slides. So what has Centrum Group done? Centrum Group has transferred all the assets of the Financial Services Limited Company and the Microcredit Limited Company as a step down subsidiary into Unity Small Finance Bank. It also has the ability to offer insurance, gold loans, vehicle loans, wealth management services, and other services that its other subsidiaries provide using the technology of Bharat Pe. So it is the Bharat Pe's technology, but Centrum Group's vision, Centrum Group's business strategy, Centrum Group's products that would be offered by this new bank. So it's like giving a monkey a bazooka instead of a pistol. And there is another point that one must observe is the acumen of Jaspal Bindra. Of course, everybody remembers 2018 of how most of these NBFCs had failed There was fall of IBHFL, India Bulls Housing Finance Limited, Diwan Housing Finance Limited, ILNFS, and they had put an incredible strain on the financial health of the entire system, and the market was crashing like crazy, because of which RBI, which supports deregulation, started putting forward regulations in order to curb the toxicity that is being spread into the financial health. Because, as you guys know, I've said this time and time again, confidence spreads really slowly, but when there's panic, fear spreads. Fear is contagious. Now, talking about Unity Small Finance Bank, what is the status of this bank? So, the status of this bank is that it has about 1,200 crores of equity capital, and it commences operations on the 1st of November. It also has an existing asset base of 2,400 crores that has come from CML and CFSL, as I discussed it in the last slide. So, why has Unity Small Finance Bank been created? Why is not PMC Bank being run and then converted into Unity Small Finance Bank? Well, the reason for this is under Section 45 of the Banking Regulation Act, one must have an operational bank for a merger or takeover to be taken place. So, basically, Jaspal Bindra has created a new bank, which is Unity Small Finance Bank, as an NBFC leader, as an NBFC person, despite reservations by RBI by for giving banking licenses to NBFC. You know how IBFL, India Bulls Housing Finance, wanted to acquire a small finance bank, and RBI rejected the license. It is surprising how Jaspal Bindra has been given a banking license, that is the 12th small finance banking license. It's just astonishing. Maybe Jaspal Bindra has a lot of links in the industry, or he's just a very smart guy who's giving kickbacks to the right person. But the point is, he somehow has got a banking license for this company, which is a great task. So basically, he's created a new entity, which is Unity Small Finance Bank, and now he'll make this bank operational. Then he'll merge this bank with PMC Bank, creating a much bigger entity. This is what Section 45 states, and this is the course of action Jaspal Bindra is taking. The promoters would also plan to infuse 1,900 crores in the next 2 years over the 1,100 crores they have already infused. That means they'll have an equity capital of 3,000 crores. Just so that you know, the regulatory requirement for small finance bank is to have only 200 crores as equity capital. But currently, with 1,100 crores equity capital, they are 6 times over. And tomorrow, when they infuse 900 crores more, they'll be 15 times over the regulatory requirement. That means this shows the confidence with which Bharat Pe and Jaspal Bindra are running this entity. They're going all out. So this is a small figure. You can see Bharat Pe Centrum SFB to be given 6 years for IPO. That means by 1st of November 2027, you would see an IPO for Unity Small Finance Bank, and that's when you would get your money 10 times, 20 times returns easy. Moreover, SFB promoters would have 10 years to bring their stake to below 50%. Centrum Group would then have 40% stake, and BharatPe would have 10% stake by 2030. Moreover, you should also know that SFB won't be able to sell home loans for the moment till they are, I would say, amalgamated with PMC Bank. Then they effectively get the licenses of PMC Bank as well. So again, there's a long road ahead, but of course there is a lot of scope once you reach the end of the road. Okay, now I've talked about everything. I've talked about all the glitters, but trust me, whatever glitters is not gold, and there are risks associated to this bank. The first risk is we don't know what PMC might be holding. As of now, Unity Small Finance Bank has been started. Tomorrow it will be merged with PMC Bank and a new entity would be created. But do we know what is there in PMC's books? PMC is not a public company, it is a cooperative bank. So its books are not disclosed to the public. Only RBI knows what is there in the books. So it might be holding a bag of toxic assets that might eat up the entire equity capital drained out by the promoters, and promoters might be throwing good money over bad. So that is something that one should wonder while investing in this company. And maybe if I think about it, why have promoters infused 6 times the regulatory requirement into the company? Maybe they also might have seen the books of the toxic assets that are being held by PMC. Again, food for thought. Who would repay the depositors of the PMC Bank? So, you might have seen news with lines of depositors standing outside PMC Bank waiting to get hands on their money, and with withdrawal limit of as low as 50K, they're still struggling to get the money that they deposited in PMC Bank. So again, who would pay these depositors? From my understanding, up to 5 lakh rupees of deposits are insured by the Deposit Insurance and Credit Guarantee Corporation. And this is honored by them even in the part of the amalgamation process. But there is a good chunk, there's a 15 to 20% chunk of depositors that have deposits over 5 lakh rupees. The question is, who would cover them? Would the existing entity cover them, or would the existing assets that were given out cover them, or will the new promoters that have taken over this entity cover them? That is a question that one must note. Also, there are institutional depositors who have deposits of over 1 crore rupees, and the deal made by RBI and Centrum Group is that there'll be preferred shares that will be issued to these institutional depositors with a face value of 10 and about interest rate of 4 to 5%. And these preferred shares can be swapped for preferred shares in the new entity. So again, there would be a dilution of shareholder stake in the future once the arranged scheme of amalgamation is achieved. This is a risk because if you buy 100 shares and tomorrow institutional investors would invoke the preferential share treatment, your 100 shares would effectively be 50 shares because your shareholding that company has tremendously decreased. So, guys, this is my take on Unity Small Finance Bank. Again, Centrum Capital is the main share that you need to buy. It is the holding company of Unity Small Finance Bank, valued at rupees 30. It has a price to earning ratio of minus 0.1, which is not that bad, not that great either. But the valuation of this company is much better than Paytm. There's no point buying Paytm. If you get a chance, get your hands on this 30 rupee share and it might do wonders for you. So guys, this is it. I hope you have liked my video. Thank you very much and have a very nice day. Cheers.